For the financial year 2023-24, you have less than 2.5 months to plan your taxes. Salaried individuals need to submit documents related to tax savings in February to their respective companies. The new tax regime has been made attractive, causing confusion amongst people in choosing between the new and the old tax regime. In today's video, let's explore the tax benefits available under both tax regimes that can help you make an informed decision. Now, the old tax regime is quite popular amongst taxpayers due to a number of reasons. One of the reasons is the numerous options it offers for tax saving. There are approximately 70 exemptions and deductions in the old tax regime, aiding in reducing taxable income and tax liability. Additionally, the scheme is favoured for cultivating saving habits, earning tax-free returns through long-term investments, and accumulating funds for retirement. One of the most common sections for exemptions and deductions in the old tax regime is Section 80C. Under Section 80C of the Income Tax Act, investments in various schemes such as the Employee Provident Fund or EPF, Public Provident Fund or PPF, life insurance, etc. can help you claim deductions of up to 1.5 lakh rupees. Moreover, there is an additional deduction of 50,000 rupees for investment in the National Pension Scheme or NPS. Thus, investments up to 2 lakh rupees can be kept out of the tax purview. Moving on, health insurance is covered under Section 80D. Deductions are available for premiums paid for health insurance policies for oneself, spouse, and children with the deduction limit of 25,000 rupees. For senior citizens, this limit extends to 50,000 rupees. If both you and your parents are senior citizens, you can avail a deduction of up to 1 lakh rupees. The House Rent Allowance or HRA allows salaried individuals to claim a deduction for the rent paid for their accommodation. However, there are certain conditions that need to be met for this. First, the actual amount received as HRA. Second, 50% of the basic salary in metro cities and 40% of the salary in non-metro cities can be considered for HRA. The third condition is deducting 10% of the annual rent paid from the annual salary remaining after the aforementioned calculation. Remember that the lowest of these three amounts will be considered for deduction. Under the old tax regime, there is also a tax benefit for purchasing a house with a home loan. A deduction of up to 2 lakh rupees can be claimed on the interest on the home loan under Section 24B. Similarly, there is a deduction available on the principal amount under Section 80C. In the new tax regime though, even though tax rates are lower, but unlike the old regime, there are no exemptions and deductions. Budget 2023 brought several changes to the new tax regime. The basic exemption limit was increased from 2.5 lakh to 3 lakh rupees. The number of tax slabs were reduced from 6 to 5. Salaried individuals received a standard deduction of 50,000 rupees. The surcharge was reduced for high earners. In the new regime, there is no tax on income up to 7 lakh rupees, and adding the standard deduction keeps income up to 7.5 lakh rupees outside of the tax ambit. The possibility of tax savings can be better understood through an income tax calculator. Let's take an example. If your gross salary is 10 lakh rupees and you are eligible for a standard deduction of 50,000 rupees under both the old and new tax regimes, then the total tax in the old regime without any exemptions would be 1,06,600 rupees. But in the new regime, your tax liability would come to 54,600 rupees. Choosing the new regime could save you 52,000 rupees. If, under the old tax regime, you make investments of 1.5 lakh rupees in 80C, 25,000 in 80D, 50,000 rupees in NPS under Section 80CCD 1B, and claim a deduction of 2 lakh rupees on home loan interest under Section 24B, your tax liability under the old tax regime could be as low as 18,200 rupees. Opting for the old regime in this scenario would save you 36,400 rupees. The calculation makes it clear that maximum utilization of available exemptions up to the limit of the new tax regime would result in more significant benefits. For instance, if a taxpayer invests a significant portion of their income in tax-saving options, opting for the old tax regime may be more advantageous. However, for those who cannot spare extra funds for investments or who prefer not to make investments for tax-saving purposes, the new tax regime proves to be way more beneficial. Before choosing any regime, it is advisable to use the income tax calculator available on the Income Tax Department's website to calculate your income under both old and new tax regimes.